So I want to share screen here. Going to have to bear with me for a second on getting all of this data in front of me so that we're not looking at the wrong screen, but get this correct here. So I want to talk about what a recession means for the housing market. And I'm going to show you a lot of different graphics and talk about a lot of different things. But I really want to deep dive. I have people asking me every day, and telling me every day that the market's crashing and we're going to have a repeat of '08. One of my best friend's husband and I were talking the other day. Yes, Casey, I'm talking to you and talking about what a recession means for the housing market. And so as you see here, when the recessions happen, the thing that really it's affected is the mortgage rates. So we're all upset that the mortgage rates have gone up. Well, the recession is actually going to help level that off. And you've seen it already. We're seeing rates having gone down a little bit. And we're having seen that some people are saying, okay, the Fed's raised it a whole bunch. And then they said, wait a minute, let's not raise it so much. And so we've seen it come back down a little bit. We've also seen that we're, it leveling off. And so again, want to share a little bit of these stats with you. So I'm going to go back in here and share a little bit more. And so you all know I'm a numbers person, right? And so you look at our average days on market, you look at the time that a home is sitting on the market. And this is just the last 6-7 years. So I'm not going back, as far, but if you look at how long properties used to sit on the market in our area, this is Stephenson County and the surrounding area. And like I said, let's say February 2018, 266 days. And you look down here right now, December of this year, or this last year, we're down to 34 days. And that is just unheard of. And like I said, you see there's definitely cycles in the market. But wow, we are still at a low inventory and still at properties selling at a very quick rate. And why is that? So let's talk about, first of all, different areas are going to be different. So we're going to dive into some of the local and some of the national numbers. And I know you're listening to the national news, and the national news is telling you that, again, the market's crashing, everything's froze, everything stopped. Well, first of all, some of those big market areas are second home markets. So those people have slowed down. Some of those markets prices had gone up so much, and they had people coming from out of state, like the California buyers coming into Arizona and Texas, and the New York buyers and East Coast buyers coming down into Florida. And those people were paying cash because they had sold a home at a very high price, and they were coming to what they considered a more affordable market. And so they were knocking a lot of the local people out of the market because those people couldn't afford to keep up with that kind of competition. So let's talk about that buyer demand, and let's talk about, where we're at and why I see that this is not changing and we're not seeing this crash. So if you look at our population, by generation, the baby boomer, everyone says, oh, all these baby boomers are selling their homes. All these baby boomers, are going to get out of the market or not going to own a home. But look, the people that are buying right now, the millennial generation, that millennial generation is larger than the baby boomers. And those people all now have good jobs. They're now able to buy a home. They're now tired of living with mom and dad. They're tired of living with an apartment, and they're tired of paying those rates. And then you look at the next generation coming behind them, another large population of generation. So, people say, well, there's not a buyer demand. Yes, there is a huge buyer demand. Look at the numbers here of how large that generation is. Then we talked about interest rates, and I know everyone is upset. I had somebody say to me yesterday, I want 4% interest rate. I'm sorry, that's not happening. But let's look at the rates. Let's be realistic here and think about okay, what are the rates and what are his historical rates look at? So, you might say, oh my gosh, I want that crazy rate, but look at how low these rates still are historically to our economy, to our history. So, you get back in the 90s, 9%, people would die right now, right? If we went from 4% to 9%. The feds have not done that. They know that they needed to level off. Look at your savings accounts now earning money, your CDs now earning money, your investments doing better because we are seeing these rates coming up and leveling off, making for also a third party market. So for many, many years, we've had where the only people writing loans were Freddie Mac, Fannie Mae, VA. They were government backed loans, FHA, those type of loans. Well, let's face it, we can't have the government backing all of our mortgages. We need to have other industries and other investors coming in. Well, at 0 and 1 and 2%, those people said, forget it, that's not worth the risk. Now we're seeing those other loan types coming out and those other lenders and investors coming in. Yes, we've seen some mortgage companies close due to some of the restrictions, but that's not to say that there are not mortgage options out there and that there are not great programs. Just some of the restrictions have changed. So we talked about the generations and we talked about the affordability. This is why it is so important for you to be looking at, talking to someone professional in your market area, because looking at all of these things and deep diving into the market, what's going on in your market, the condition of your home compared to the others, where prices are headed, the buyer demand. And as I said, that changes in every different market area. So let's look at that for you and for your home and what is right for you. We've talked about that numerous times. I'm not interested in you buying or selling a home now I'm interested in you buying and selling a home at the right time. And so everyone, their story is different and what is right for them. So we're going to dive into some of our local numbers for the county and the city and look at, our area. Let me go back to the screen here. Hang on just a second with me. So I look at the last, 6, 7 years. And so again, always cycles in our economy, in our market. If you look then at last year, even last year was up and down, and people say, oh, well, it dropped off. Well, it didn't bottom out by any means, first of all. And always, this is a seasonal thing. And we're going to look at that chart here in a minute. But look at prices for last year. So the end of the year ended strong. We were not, again, suddenly the bottom dropped off. November is always a slower time for us. So we did see some lower prices, but lower in terms. Like I said, think about, where that's been. Now let's look at a little bit longer of that time frame. So again, sales by month, always a cycle. Every year you see up and down. So we always see these trends. Yes, 2020 was a crazy peak. 2021 was still strong. 2022 was still strong. But none of these years are like we're down in the dumps compared to what, listening to the news media. Then you look at those average prices, same thing. You look at our prices that used to average 80 and 100,000, took us a long time to get over that. Then we started, okay, 100, 110, that's great. So here in the Midwest, that's one wonderful thing. We are insulated. We never see as much extreme, just like you're seeing from this chart. There's slow, steady gains, but always ups and downs. Always. There have to be in our market. And in every market. But as I said, in the Midwest, thankfully, we are very insulated in that. Then we talked about this average days on market. So one thing we're going to talk about is it still a good season to sell your house? Supply is still low. We are at less than 2 months of inventory currently in our market and in most of the country. So even though they're saying, oh my gosh, the market's coming to an end, supply is still low. Builders have slowed because of costs of building. Inventory of available homes has slowed. So you look at these graphs, and like I said, seller's market back then, we turned into a buyer's market for a few years, traditionally much more of a seller's market. And we are still way, way down. So this is still the case. It is still a seller's market. Like this says, while I see 2023 is not going to be a frenzy, 2022 was not as much of a frenzy as 2021. I still see that the generational buyers, the demand, the supply, all of these things are still going to make for a good real estate market and a good, steady, level market. Let's face it, we're getting back to normal, getting back to sustainable. So with rents having skyrocketed, with demand being out there, with supply being low, it is still going to be a strong market for this year. And let's talk about how this affects you, when is the right time for you, and what is the best decision for you to make in the right time for you and your family to buy or sell your home. You can comment, you can reach out, you can text us or call 815-275-6610 or 815-297-1778. And we look forward to helping you.